Okay.
All right.
Hi, everybody.
Hello.
We are getting ready, giving people some extra time to sign on. It's 12:59 right now. I think last week we started at about 5 after. So let's see, as our spots start filling up, and then we'll get started.
Sounds good.
And everybody who's listening, if you guys are able to, probably in the questions bubble, let me know if you can hear us and see us and that you're seeing our presentation. That'd be great. This is only our second one, so I still am not immune to technical difficulties.
Hey, Laura, are we able to see the questions on our end too?
I don't believe so. Last week, I think I was the only one who was able, I actually think I can click send to all. No, I can only send my answer.
Okay.
Sorry, I don't know what it looks like for you guys as panelists. I only know like what my side looks like. But last week I just kind of like asked Xander the questions towards the end, and then gave him the floor to answer. You may have jumped in on one of those actually.
Yep, he was behind the scenes. Everyone's staying hydrated.
Yeah.
Are you drinking wine, Peter?
Yes.
No, it's not time yet.
These days, it's that time all day. It doesn't matter.
Yeah, there's no time.
Pam, you want to bump Gene and see if he's going to hop on or if he's just going to be a viewer this week?
Okay.
Just to see.
If he doesn't come on this week, I'm going to do a challenge. And if we get over 40 attendees, he needs to do like 25 push-ups or something.
Oh, yeah.
Paint his face for the next webinar. The CR logo.
Yeah, there you go.
All right. We've got the room filling up. So, Blake and Josh, what is it like for you guys working from home?
I'm good. I mean, I'm pretty settled in. I've got sort of a separate office area and brought my entire office home essentially. So I've got my standing desk and all my screens and everything. So it's pretty good. I feel like I'm pretty efficient overall. Definitely different, but pretty efficient.
Desk guy?
What's that?
You're a standing desk guy?
Yeah, I have like a Vera desk, so you can like adjust the sides and it lifts up. So I sort of split up the day that way. I highly recommend it. It's
It's awesome.
a game changer. When you start to get a little tired, raise it up, stand up for a few hours, keeps you going. It's great. It's awesome.
We're looking for a standing desk for our house too, so I'm doing some shopping around. They can get pricey. Yeah,
it's not cheap. It's not cheap. And so I bought the desk and then I bought like a pad to stand on, like a big foam, like kitchen type pad. So you get some nice padding on there too, because if you're going to stand for 2 or 3 hours, you want that. But it's really, I cannot recommend it enough. It's awesome.
So Gene needs the link, Laura.
All right, I can do that. I think I have to do it just from my phone right now since I'm sharing my screen.
I'm gonna add some intro music next week.
I know, right?
Add some Dance Monkey for Jean.
I just
That's great.
resent him the panelist invite, so he should be able to join in soon. And it's 1:04. I do still see a couple more people coming in right now. So I'll just give people a couple more minutes, and hopefully we'll let Jean get in here, and then we can get started. Sound good?
Sounds good.
Sounds good to me.
I see Jean as a panelist right now.
Yes.
Gina's here.
Jean. All right, it's 1:05, so why don't we go ahead and get started? Thank you guys for everyone as far as attendees go for joining us. And then Pam, thank you for organizing it, and for all of our panelists for giving us your time today. We always want these to be interactive, so I'm monitoring questions on my end. Everyone should have the question bubble as far as attendees go. So if you guys have any questions for any of our presenters, just feel free to shoot them over. If they don't get answered during their presentation, we do have a Q&A session at the end, so all of your questions will be answered during that time, and give us feedback then as well. So Pam, I'll let you take it away.
Thank you, thank you. So hi guys, and welcome to CR's Tuesday Tips. This week it's financing your purchase. I'm Pam Story, and I'm with CR Maryland's retail team, and I am again super excited to be hosting our second webinar. So like Laura mentioned, the forum over here is open discussion. I'm also not looking to take up a whole lot of your time. So, we're gonna try to get through, kind of the talking part. And I think the most important part is opening it up for Q&A so that we can answer any questions that you have. So our agenda for this week, like I mentioned, is gonna be focused on financing and some mortgage updates with Blake Hyatt from Absolute Home Mortgage and Josh Shine from Trius Lending. So this is going to be really great information for any of our future home buyers, any investors, and any of our real estate agent friends that have joined us today, so that you can stay updated on the market. So, and then after that, we have our weekly update from Stacy at Floors, Etc. And then we will open it up, like I mentioned, to Q&A. But again, it's not restricted to that. So Laura is able to see all those questions. And if it's anything that, we can kind of jump in quickly and answer, we'll go ahead and do that. So let's get started. I'd like to welcome Blake and Josh to join us today. So if you can both introduce yourselves, give us, a brief description about yourselves, and then you can go ahead and jump right into your presentation.
Blake, why don't you start off, and I'll go when my slide comes up there.
Awesome, perfect. Laura, I think you're controlling it. We can jump to the first slide.
Right here?
Yeah. So obviously today's presentation is solely based around the investors. So we do help people who want to buy their first house, their second house, an investment home, an investment property. Today, we solely based our obviously all of our information around the investor purchase loan. But don't think you still can't reach out to me if you have any questions or concerns about a primary residence purchase, or even a second home or a vacation home. All right, Laura, on to the next one. Oh, go back for me real quick. I guess one slide got cut. So just real quick, know who you are working with. That's the biggest part of, my message today. It doesn't mean that you have to work with us at Absolute Home Mortgage. When you're doing an investment loan, it's really, really important to find a lender that will, number one, listen. you're driving the ship. You're going to be the one making the calls on what you want to make margin wise on the property after you receive the rent. It's really your job to boil it down. It goes a little bit further, right, than when you're purchasing a house for you to live in. That's a little bit more of a simple act, right? You budget your stuff. You say, hey, I can afford to pay this mortgage on my own. You can look at your mortgage. You can look at your bank statement, say, all right, if I have a $1,500 a month mortgage payment or $2,000, I will have enough money at the end of the month to pay my other bills. When you're buying an investment loan, it's super important to realize that you're going to have a mortgage payment due to the mortgage company. You're going to have rent coming in from a renter, and then there's going to be a margin there, right? Are you going to have a property management company? Are you going to have to set aside money for repairs each month? So it's very important to, number one, deal with a lender that's going to bring all that stuff to your attention, but also, number two, deal with a lender that's going to listen to you and what your goals are for this property. The nice part about today's society is we're doing this presentation online. Everything is published online for customer satisfaction. You got the Better Business Bureau. So there should be no excuses for anybody not to be able to say, hey, I know my lender before working with them. And then this slide right here just kind of illustrates our simple formula of moving through the loan process. Even if you're buying a primary, an investment property, it doesn't mean to be an investor doesn't mean you have to have bought a house before. It's important just to realize that the process is no more different. We might want to spend a little bit more time getting pre-approved, as there's some differences between the programs that I'm going to hint at a little bit later in the presentation. But the biggest thing to realize is, hey, you still have to talk to a lender. Hey, I still have to get pre-approved, get them all my income documentation. And then it's important to have a mortgage loan officer that will be able to work with the realtor of your choice so they can communicate on, is this property going to yield the correct amount of rent? Are they looking in the right purchase range to receive that goal of that 1% margin that everybody wants on their property each month? So it's just creating an open sense of communication between the realtor and the lender, and that's where I think that's very important in the get pre-approved side. But then obviously the process is very similar moving forward. You put in an offer, you finish up the loan application, which we start when we are pre-approving you. It's our goal to get all the documents up front. That way we can make sure we're checking off all the boxes and making sure we know where the money's coming from and how much you make and what your debt to income ratio is with the new mortgage that you're going to be taking out. But then we're also then going to submit all that into underwriting. The underwriter is going to get the approval. At that same time, we're going to make sure we get your appraisal done, your home inspection done. And then once all that comes back clean, we're submitting it in for the clear to close. It really is that easy. It's just obviously if you're not working with the right team, if you're not getting all your income documentation, or if you're not being as upfront as you think you might want to be in the process, those are all things that could slow the process down later on. Go with the next slide, Laura. So I want to spend some time on this document. I really appreciate you guys made my presentation look so much better. So I appreciate you guys making some edits to it.
That's all
So
Alyssa.
here's the biggest. I tried to make this presentation to where I could drive a lot of the biggest concerns that I always see people ask, or the questions that they ask us up front. So let's talk about down payment, right? We're not talking about closing costs. We're talking about the mortgage cost of the loan. So your down payment, obviously Absolute offers a 15% down investment loan. We offer a 20% down loan, and we offer a 25% down loan. Now, let's talk about the 15% down. That's a program that a lot of people don't know is out there in the universe. What is the positives of this loan? Hey, you can put 15% down rather than 25% down. What is the negative? You are going to have mortgage insurance. Now, that's a thing that we can talk about more in depth because mortgage insurance is based off of the consumer profile. But just know, okay, if I do 15% down, I will have monthly or single paid mortgage insurance, and that will be an added cost to either my closing costs, or it'll be an added cost to what I'm receiving after I pay my mortgage and the rents come in. 20% down. That's the more, everybody knows about this option. The 20% down will allow you to have no mortgage insurance. And then the 25%, that has the best interest rate. I always try to make sure I bring awareness to that with my customers, because it's important. You're trying to make a profit on this property. So if you can get a lower interest rate by only investing money into your equity rather than paying points for a lower rate, that might be the option for you. It's important in any big purchase, right? You always want to have options. I know, Stacy, when people come into your store, you are giving them options, right? It's important for everybody to always receive options. That's why I wanted to present today 15, 20, and 25%. But also, if you decide you want to do 30, 35, then we can look at it. So what would that do for you? Obviously, it would lower that mortgage payment, which would then allow you to drive more cash flow on the property. So debt to income ratios, we're still qualifying you off of those. If you're not currently holding a mortgage, this is a very commonly asked question. If you're not holding a mortgage, we're going to take a look at your lease. We're going to want to know how much you're paying in rent. That way we can factor that into your debt to income ratio. Let me give you an example. We have a lot of customers that we do this for that do not own homes because they live in New York. New York is a very expensive place to actually own a home. So I had a customer last year call us. He was living in New York. He wanted to buy investment properties in Baltimore City because he heard it was great. Everything I hear from him, he's happy. He's getting his rent. He's got a great margin. But what we did was we had to get a lease from him because we had to show the underwriter is going to say, hey, you're buying this as an investment property. Where are you living? So that's going to be factored into your debt to income ratio as well, along with debt such as your car, student loans, credit cards, which is all things that we look at when we are doing your initial application and running your credit, as well as collecting your income docs. Now, down payment. This is another large question that we always get asked. A down payment on an investment loan cannot be a gift. So what that means is you cannot receive from anybody who's not on the loan with you. If you are buying this investment property with, say, your father or your cousin, and they're saying, hey, you be on the loan and I'm going to give you the down payment, we can't do the loan that way. We need the funds to be from the customers on the loan. So one easy solution is that is having both you and your uncle on the loan, or you or your aunt, or you and your brother. That is one way we have gotten investment loans done before, when the funds are coming from another location. Also, verifiable funds. Underwriters are very, very tricky with this. They want to know where all your money is coming from, and they want to know if there's any large deposits. They want to know if, sometimes where your paychecks are going into. So that's an important thing for us, is to know where the money is coming from for the loan and for the down payment. Now, those are the big keys for the investment loans. And I really, at that point, I want to open it up to questions, but I know we're going to run right into Josh's presentation. And Josh is a great alternative lender.
That are specific to your presentation.
Yeah, that's fine.
So Terry asked on this slide, how long does the mortgage insurance remain on the mortgage payment?
It would drop off at 78% loan to value.
Okay, Terry, hopefully
but you would have to have it for at least 2 years.
Okay. And then on the prior slide, Terry said thank you, so I think that answers her question. Aaron asked, in point 3B, when the seller is point 3B when the seller accepts your offer, or question mark?
In part 3?
Yes.
So it would be when you put in an offer. So in the pre-approval process, and sorry I didn't go through this as in depth, but during the pre-approval process, we're going to get all your income documentations, pay stubs, tax returns, everything we're going to need for the underwriting process. So that way, say you're working with Pam or Jean, and you say, hey, I want to submit an offer on this house. We generate a pre-approval letter. Your offer then will get accepted. And then what we'll do is, because we have a subject property, we're able to now disclose the loan in our mortgage system, which will now allow us to send out the mortgage application to you, which then you'll sign. And then once it's signed, we're then able to move it into the underwriting process.
Awesome. All right, so Aaron, hopefully that answered your question. If you have any follow-up questions, just shoot them over. And then we are going to move on to Josh.
Okay, thanks guys. Thanks Pam, Jean, and Laura and CR for putting this together. It's great. Let me just start off by saying the CR team, Pam, Jean, Blake at Absolute, we all work very closely together. And it's really nice when you have a team. And so I want to sort of encourage, regardless of where you are in the process, if you're starting to figure out you want to get into investment properties, if you already own investment properties, having a team and having the partners and relationships on your side is really key. So having the agents that can help identify and find places for you, having me, the hard money side, which I'll get into in a minute, and then having Blake on the traditional mortgage side. You have all the players lined up for you, and that's going to help you be more efficient, more productive, and ultimately more profitable in real estate investing. So love seeing everyone working together and connecting during these crazy times. My name is Josh Shine. I'm one of the partners at Trias Lending Partners. You can ignore the two other guys, one without hair and one with white hair on that picture there. Just focus on me. That's all that matters in this environment here, okay? Next slide. So we've been in business since 2003, and that's pretty rare. And so let me just start with that for a second. Most hard money lenders, most private lenders started up in the last few years. So we're unique in the sense that we're, 17 plus years in the business, and 17 plus years in the business only locally. We don't do deals outside of the greater Maryland region. We do a little bit in DC, Northern Virginia, a little bit in Southern Pennsylvania, some York, some Harrisburg, but 95% of our business is in the greater sort of Baltimore, Maryland area. All the counties, including the city, is where we do our business. Because we've been around so long, we have a pretty nice sized portfolio. We have more than 200 loans currently on our books that we service and handle throughout the region. We receive the payments ourselves. We deal with clients ourselves. That's sort of how we run the business. We are not backed by any financial institution or any parent company or any bank or anything like that. We have our own funds and we make our own decisions. In this environment, depending on how familiar you are or are not with what's going on in the mortgage financial markets, and more specifically the commercial mortgage financial markets, many people have gotten out of business recently. Some on a temporary hold, but I've heard of some companies that have permanently shut down already, believe it or not. Scary times for some people, scary times for people who don't have the financing on their own, relied on a financial institution that got caught up maybe being a little too risky in the lead up to the difficult times, and the credit markets and banking sort of institutions shut off funding to a lot of hard money and commercial lenders. So we're still around, we're still active, we're still lending, and that's because of our unique approach to how we do our business. Our business, similar to what Blake was saying about how he does his business and how he conducts himself, and I know that from having worked with him and obviously with the CR team and Jean and Pam as well, it's relationships, it's service, it's trust. It's working with people who have a great reputation, who you know are going to be honest and open-minded in what they're telling you. There's no hidden fees, there's no hidden nonsense, there's no numbers you don't know about. That's really important. As Blake said, there's no reason to not be able to do your homework right now and know that you're going to work with someone who has a great reputation and is a trusted member of really the local community, which everyone on this call is. So really important stuff. The last line there is really important and really differentiates us. We go out of our way to tell a lot of our clients when it doesn't make sense to do a deal. Obviously, that doesn't make anyone money when we tell someone not to do a deal, but ultimately makes our client money. It makes our client money by saving them money we think they would lose in doing a specific deal. So we're unique in that sense, and we deal with it every single week. We have clients that call up and overpaying for a property or they're unrealistic on their ARV. Sometimes it might just be us trying to clarify their numbers and sort of bring them into reality for where we think it's going to be. Many people, when they get into real estate investing, are sort of dreaming about how great the numbers are going to be and how stupendous and incredible their return on investment is going to be. We will be very honest and open in saying you may not make as much, that after repair value may not be as high, you may not collect as much rent. Let's make sure we're being very realistic with all of the numbers. So that's also very unique with us. Next slide, please. Okay, so we work with everyone. That's the bottom line. We work with people who are brand new to the business. We work with people who have never owned a real estate property before. As Blake said, some people who don't even own their own homes and are renting, but want to get into the real estate investment business. We work with people who both buy homes to fix and flip and buy homes to rent out. Currently in this market, even leading up to this sort of crazy time we're living in right now, a lot of people were starting to transition to rental properties to own, to earn that cash flow and to build that up over time. Having said that, there's still people doing fix and flips. I literally am closing one today. Someone is buying a property at a really good price. It's going to be something that is ready to be sort of torn out inside, rehabbed, updated, and they're going to sell it to a family or whomever in 6 or 8 months. It's a unique time we're in right now for some people. If they're finding the right deal, they're able to look at the calendar and say, we certainly hope this is going to be done and we'll all be back in our offices and back out on the streets within a few months. If you have a 3, 5, or 6 month renovation project to do, this could actually be an opportunity to be able to work on that, time that, and schedule that, working within the rules and guidelines of when you're allowed to be out or who's allowed to be out where. But we do have some crews. I have one guy who does his own work with his son. They're going to spend the next 6 months doing it. They had budgeted for the next 6 months to do their rehab, and they're going to be done at the end of the summer and put it on the market. And all indications are from them and from us, we think they'll be in a great position at that point. We also work with seasoned investors, people who have actively flipped many, many properties. One of our top clients does about 4 flips a month. He's constantly buying properties. It's really never ending. And we have a great relationship with him. We've grown together with him, and that's a key to what we do. We want to grow with people from that newbie beginning part all the way to becoming someone who can do 1 property a week or a few properties a month. We adjust our rates, our terms accordingly, and definitely sharpen our pencils, as I say there, when we need to keep a long-term relationship. The middle part there, looking aside from the graphic, the way our numbers work is 80% of the purchase price is what we finance and 100% of the rehab costs. So in the current market, we haven't made a change to that yet, which is very unique. We are just looking at things, I would say, with an additional magnifying glass, really paying close attention to the current values, to where we think the value will be, and really looking closely to the borrower. Next slide, please. So leverage is what we're all about. We have people that come with us and have enough cash to fund it on their own, but it still makes more sense to use someone else's money. Okay, OPM, that's how we sort of conduct our business, and that's what makes most sense for real estate investors. Our rates are going to range from 12 to 14%. That's a 1-year interest-only loan. We charge 2 to 4 points on all of our loans as well. As I mentioned, 20% down on the purchase price plus closing costs. Really briefly, if you're buying a $50,000 place, that's only $10,000 down plus closing costs. If you're buying a $200,000 place, that's $40,000 down plus closing costs. So you don't need necessarily a ton of money to get into the real estate game. It can be about 15 to 20,000 is usually the minimum. That's not a lot of money, but it's not an outrageous sum to get into real estate. In the current market, reserves are really key, and I put that in there. That's one of the biggest changes we're seeing and that we're sort of putting upon our borrowers and all the clients we're talking to. Do you have money on the side? Do you have additional reserves for issues, challenges, downturns in the market, which there are going to be some challenges coming from all of the events going on? How much do you have, and how will you be able to survive? And so we're looking at that. Obviously, we want good, steady, stable employment. We do look at that. Just to take a quick side turn here, hard money is not for bad credit people. It's not for no credit people. It's just quick access to funds to get the property closed. Most of our deals we can close within 3 to 5 business days, literally. Work with us, get the property normalized, get it stabilized with a tenant in there, and then you would call someone like Blake and you would refinance out into a long-term product. That's sort of the great way to sort of run the system and then repeat and do it over again. Come back to me as the hard money guy to close quickly, and then back to the refinance for a long-term hold down the road. A few of the loans we've closed recently in the last 3 or 4 days, and we have one closing at the end of this week, we're actually having the client put additional payments in escrow. So one client, we're taking 8 months of payments. Another client, we're taking 12 months of payments. That just allows us to have a better sense of security for them. And I think for the client, it allows them to know I've put the money aside, I'm good on that investment property, and the rest of the money I have I can use to live with, but I know I have this property locked up and in a secure, essentially, situation. And essentially, it's giving them access to the funds they might not otherwise have. Next slide, please.
Josh, I actually have a question.
Yes.
So how are prices being evaluated during these uncertain financial times? Will values be established on current sold comps or market projections of a possible recession?
So great questions. Obviously, that's the $1 million question. I was on a national webinar yesterday with one of the big appraisal companies, and he said that's a question he's getting 100 times a day. None of us know specifically. I've been in the mortgage business for 20 years. I was active and had my own mortgage company back in 2008. And at that time, we had a pretty good idea of what was coming. Maybe not everyone knew the exact percentage drops that were going to take place in the real estate market, but we knew things had been going down an odd path. This is a very weird, different, and unique situation. Banks are strong. Banks have a lot of capital. There's an enormous amount of money that will eventually, once the funds start to get dispersed, be put back into the system, into the economy. Our region specifically has a really incredible base of jobs, employment, federal government, IT, cybersecurity. The clients that we do loans for, a large majority work for the government. A large majority are contractors for some form or some variation of the federal government and or IT. They're good, stable jobs. In our estimation, we don't see that those people are going to get laid off in this environment. In fact, we think they'll be more stable and have a more secure job than ever. As such, we think that the rental market will continue to be good. There's absolutely going to be a blip. There's no question about it. There has to be. But we don't predict a major significant downturn in values. Having said that, no one has the crystal ball. Okay, so these are projections that we're making based on what we're seeing on a day-to-day basis. Obviously, things are changing quickly. The market's changing quickly. The environment that we're in with regards to how this is spreading and how it's impacting the greater sort of mid-Atlantic is changing every day as well. But overall, we think that in the long term might be 6 or 8 months, long term might be 12 or 18 months. But in the long term, this market will continue to be strong and will continue to have a good and active flip market and buy and hold market. And the final point I'll make on that is during the 08 downturn, leading up to it, the Mid-Atlantic Maryland market, Maryland specifically, didn't have the high highs that a lot of other areas had. DC did have high highs. Certainly New York, San Francisco, the very large cities did. As a result, that Baltimore didn't have the high highs, Baltimore also didn't have the 50 and 60% drops as a general rule. That's really important for people to keep in mind. We don't necessarily jump up as high, but we also don't fall off a cliff like some other cities do. That's important. We tend to stay within a narrower range of highs and lows, and that's going to be important and helpful for this market for the next 6, 9, 12 months.
I have a follow-up question, so I'm just going to do that while we've got it.
Sure.
So with a 12 to 14% one-year loan, are you saying the person has to pay back the entire amount of the loan plus 12 to 14% in 1 year?
So great question. So let me explain just really briefly how that works. If you are borrowing $100,000 from us, that would be a combination of the money used to acquire the property and the rehab money. Say that totaled $100,000. Say we were at 13%, pick the in-between number. It would be $13,000 divided by 12 payments, okay? For any month you have it, you make a payment. It's not a flat number you pay for the entire year. So it's an annualized, simple interest rate. So if you have the loan for 6 months, you only make 6 payments, you're only paying half of that amount of interest. If you have it for a year, you're paying the entire interest on a monthly basis. What happens at the end of the year is there is an extension option. So these are loans that are essentially due at the end of that 12-month period. but there's an option to extend. We do a 1-year extension, and there's a fee associated with that. We have some clients who are in their 3rd year with us. We don't recommend clients do that. It's not really a good practice financially. As much as we like earning the interest on our money, it's not really smart business, and we want people to have a good return on investment. If you're staying in a double-digit interest loan for 2 years or 3 years, that's not a good return on your investment. Sometimes there are extenuating circumstances. Clients I refer to Blake, for example, Blake may not be able to get it done through no fault of his own. The client's not approvable. Okay, so in those situations, sometimes they do have to stay in our loan or they'll sell the property.
All right. Looks like next up we have Stacy, unless you have any final parts of your presentation, Josh.
Any questions, feel free to reach out. That's it. Thank you.
All right, Stacy.
Hello, hi, I'm Stacy. I'm at Floors, Etc. We're commercial and residential flooring, which includes anything from the wood floor to tile to carpet, area rugs, etc. And we are open still by appointments. I just like to throw that out there. We're not necessarily encouraging people to go out and shop, but if you do need something, especially since the contracting business is still moving forward and real estate is still moving forward, you still can make an appointment to come in and get material. People are still shipping. We're still receiving everything. What I wanted to talk about mostly today was, and a lot of people don't even know about it, is that Floors, Etc. also has an outlet. We have a beautiful showroom on Deerco Road, and around the side on Deerco near the post office, there is an outlet that is huge. It's attached to our warehouse, and we have amazing products there. And my outlet manager, Alex, showed me some pictures and gave me some prices on some things we have in stock. So great, especially now for if you're doing a rehab and you need something quick, you can come into the outlet. We're pretty much basic open. We're about a 9 to 5 now, give or take. Probably best to call me first just to make sure none of that changes. But it's cash and carry. You come, there's beautiful tile there. There's LVT. We even have marble transitions. Just, it's kind of a hidden secret. Whenever anybody turns that corner and goes in our outlet, they can't believe that we actually have this at these discounted prices. And it's the materials, the upscale materials we're selling in the showroom. It's just, we need to get rid of it. So we offer them, at very, very low prices. So these are just some samples. I know a lot of people are, doing their do-it-at-home projects right now or considering that. So this is a good option for that. We are doing curbside delivery also. So you don't even have to come in. You can order the product and we'll put it right in your car for you. But a neat little hidden spot of Floors, Etc. that I think a lot of people didn't realize we have. There's remnant carpets there as well. So that's really it. Just excited to be part of this call. Thank you, Pam and CR of Maryland, for having me. It's really, I'm kind of the fun part. After you get all the finances and stuff done, then you can kind of start to work on the creative, fun part of the job.
Blake and Josh,
Yeah.
the fun part.
So that's all I have.
All right, Pam, I'm gonna have you kind of close us out. We do have the Q&A session still, so let's see. I did get some questions throughout that I held, so let's see. Who would like to take this one? It says, what would you say is your best advice for a first-time home buyer? So maybe Pam, you want to take that as far as the realtor side goes, and then one of our guys can take it over as far as financing goes.
Sounds good. So my first recommendation is absolutely to connect with a lender so that we can get you pre-approved, and definitely so super important because we want to know where you're at. Everybody can get to that point of becoming a homeowner, but we just need to know where you're at and what your next step is. So definitely getting in contact with a lender is the first step.
And then Blake or Josh, once they get in touch with you, what are like the first steps that you guys would say?
Absolutely. I would add to what Pam said. It's really important to not only meet with a lender, but also be prepared for that conversation. It's the first question I always like to ask to potential customers is, what do you want to spend per month, right? Because what we could qualify you doesn't necessarily mean where you would like to be pre-approved. We might be able to take you and your significant other's income, put it together and qualify you for a $3,000 mortgage payment. But if you guys are budgeting for 2,000, it's important to know that. So I would always say just put a little bit of thought before you meet with a lender. Look at your expenses, look at your paychecks, look at what comes through to you. And then I always tell everybody, technology is great because you can go on and you can print out a statement from the month prior and say, hey, if my rent's $800, $900 and I think I could pay $15, deduct another $500, $600, $700 from that ending balance. Are you comfortable making that your ending balance every month? So it's just making sure that you're going in and you're putting yourself in the situation to ask the right questions when you do meet with a mortgage lender.
And then this is a similar question, but it's on the other side of things. What is your best advice for a first-time investor?
I mean, I can take that on the financing side. Similar to, I think, what everyone said here, I would contact an agent, obviously be looking for properties. A lot of the properties that you're going to find are going to come from the types of agents who are on this call, as opposed to what you'll just see online. You have to have connections, knowledge, pocket listings, and sort of the inside track to a lot of the deals that are out there, not just surfing the internet. The other thing I would say is, yeah, talking to someone like me, where I can help get you pre-approved as well and figure out whether you're ready to do this, help you understand some of the numbers, help you understand the costs and the time frame involved with buying a property, really what's involved, what to be prepared for. Again, we take a very conservative approach to looking at those numbers and to educating people. And so I think just holding someone's hands and walking them through those steps one by one is the first step to move towards that.
Mm-hmm. Yeah, and if we do have any first-time investors on this call, Jean is our Director of Acquisitions and Sales. Jean, do you want to talk about like some of the properties that we have access to as investors ourselves?
Absolutely. So as Laura said, I'm the Director of Sales and Acquisitions here at CR of Maryland. We have a retail department, which Pam is a retail agent of. We also have an off-market department where we have properties that we acquire for real estate investors, both for buy and hold and flip. You can check those properties out at crofmarylandfixeruppers.com. You can also reach out to me directly and see if we have anything currently still available. They do tend to go quick. And I mean, they sell out, the deals sell themselves, as we like to say. When it's a good deal, the investors just come. So definitely opportunity there for any newbies. Feel free to reach out to me anytime.
Awesome. And then I do have another question here from Aaron. He asked, does either lender have reno-rental financing?
I'll start and then Blake, you can go. There were, as I mentioned during my brief remarks, there were a lot of players in the market who were offering some great 30-year rental products out there. As of now, and Blake, could you jump in after this with your thoughts? I don't know of any. I've been on a number of conference calls with, as I said, a number of companies who have been either on hold or I was on with someone who laid off 90% of their 300 people. They were doing only 30-year commercial loans. So some challenging times for those types of products out there. Having said that, I know there are some other options, which I think Blake might be able to discuss through Fannie, Freddie. And more importantly, it's a timing thing. So this too shall pass, as I'm sure everyone's saying in their own industries. Those products will be back. They'll probably look different than they looked 3 weeks ago, which was 80% cash outs and very little documentation needed to get approved. It's unlikely to be as easy, and it's unlikely to be as high of an LTV, but they'll be back. Blake?
No, Josh, you hit the nail on the head. We had, I think, at one point, 3 different investors that would specialize in our 203Ks and our, which is the primary resident FHA renovation loan. We also had specialized in home style. Not every lender before this whole hiccup was even doing home style, which is conventionals financing. I believe we have one investor still left that we have to deal directly through them, which then means longer turn times. Everybody in the market is really flooding to them right now for the investor renovation loan. So Aaron, I would probably recommend just get in touch with me after. I could ask some credentials if this would even be an option for you. and then we could kind of go from there. But right now we went from 3 to 1, and I'm probably thinking as the week goes, we're probably going to get some more information that one lender is going to, obviously increase overlays, but also put themselves in a situation where they might be walking out of the marketplace as well.
Got another question here. It says, what's the max on the 203K loan?
Say that again.
What's the max on the 203K loan?
So it would be, you're usually able to go up to 100% of the purchase price on a renovation. But a lot of the lenders were looking at, they were looking at the actual budget for the loan. It might even be, I would have to take a look at that, but it would most likely be 100 to 120%.
All right. And then Aaron had asked this, and I sent it back to him, but for everyone who missed the website for the investment opportunities, it's www.crofmdfixeruppers.com. And I'll be sure to include that in our follow-up email where you guys get this recording. So unless there's any more questions, I'm gonna turn it over to Pam.
All right. Well, I did want to mention that we at CR of Maryland, we've embraced all of the changes that are happening in our environment right now, and we are available. We are, have always been and will continue to be available for all of your real estate needs. We're available virtually, and as Josh and Blake had mentioned, it's important to have a team, and that's exactly what we are. I had somebody reach out to me that wasn't pre-approved or anything. I quickly reached out to Blake, got him pre-approved, got an offer done, and everything was done virtually. I'm hoping to someday actually meet this person. Nonetheless, everything was handled, and a lot of members of my team have also done listing appointments and everything, and we're just trying to do what we can, because we know that there's needs out there, and we just want to be able to fulfill those needs. So our information is on there. Myself, Pam at CR of Maryland. You can reach out to Jean or anybody from our team. So with all of that being said, I want to thank everybody for tuning in. Next week, we're going to have our guest speaker will be Ryan Staton with Staton Walsh Financing or Financial Services. He's a financial advisor, and he is going to be going over estate planning. So again, please feel free to reach out to us for any questions. If you have any questions for Blake or Josh, their information is also on that slide that we'll be sending over to you. Or you can reach out to me and I'll make sure to connect you guys. Jean, did you want to give your contact information again?
Sorry, I'm sorry, I'm working as everybody else, working from home, and I have two little monsters upstairs, so I have to keep muting to interrupt you guys. My email address is gene@crofmaryland.com, and my phone number is 410-322-0184. You can also reach me through any of our social media platforms, so I'm very responsive and here to help you in any way I can.
Thank you so much. Thank you for all of our panelists that joined us today, and everybody that attended the webinar, and we look forward to seeing you guys next week, same time, same place, and follow us on social media for any updates. All right, everybody stay safe.
Thank you.
Thanks a lot.
Thank
Stay
you.
safe, stay healthy.
Thanks, everybody.
Bye.